Aussie dollar, we've been trading in and around some real lovely significant points recently, and you'll see this Aussie dollar it's not dissimilar to the sort of Aussie Swisses, the CAD Swisses that we've seen already, but a touch more volatile. It's been a good pair to day trade. It's the confidence currency. And we have a slightly different, but a very different daily chart preceding this recent. I mean, this looks similar, doesn't it? This decline, the rally, and the rollover. But the preceding chart is very different to that of the Aussie Swiss. Okay, you've got with the Aussie Swisses, the CAD Swisses and co, the prevailing trend is down, and we're looking for an extension, right, of that downtrend. With this, the Aussie dollar, the Aussie's been on an absolute tear. It's been trending very strongly. We had what we call turtle soup up here at the 110.12, where we failed to take out a significant high, having pulled back into this troughing shape here. We've fallen out of this, and this is more of a reversal pattern than an extension of the trend. So we want to be aware of that, and that goes some way to explaining why this is maybe a little bit more volatile than something like the Aussie Swiss. Now, within the last 10 days or so, price action, we've encountered, we've got three significant levels very close to the price action. We've got the 105.23, which is here. We have the 104.39, which is this low, then this point, slightly overshot it and moved up. And we've got the 103.90, which is this low here and this point here, where that is our ultimate reference point in this process. We have closed just settling above that 103.90. Okay. In terms of our structures then, now technically speaking, as a position trader, there's your failure to make the high. That is your structure, technically, strictly speaking, but that's a hell of a long way to wait. We can take the 103.90 as our structural short. Okay, the 103.90 is the standout point. It's the lowest low of this setup. Okay, that's your structural short. Structural long is the 105.23. Structural long is 105.23. 103.90 the structural short. Now we go to 200 tick. So bearing in mind what we've just looked at, this has given us again some beautiful entries in the week just by looking at that. Here we were moving up. We moved first of all from the 104.39. We moved up through the 105.23, made a high, failure to make a high here, which rendered the 105.23 the structure at this point, and that gave us a beautiful trade down. Went down to the 103.90, consolidated, continued to consolidate below the 103.90, came back up close to it here, again here, and have momentum push triggered by the 103.90 back up to 104.39. consolidated again. Look at these levels, and you can't make this up. These levels are strong, and now we traded down to 103.90, held and closed just hovering above the 103.90, and this low here happens to be the top of this period of consolidation recently. So this Aussie dollar, although it's not as clean as some of the Swisses, those levels are certainly tradable, and have given us some great opportunities throughout last week. No reason why we can't have the same again. So 103.90 is our structural short. Now we might as well, and we're going to get the range form in Tokyo Sunday night. You want to be short out of the range. If you want to be ultra safe, you sell these shorts, but you know the short is the 103.90. It's a big enough level. Remember it from the daily. Okay, Paula, thank you. Thanks for joining us. This is being recorded, so you can obtain it from the website. Enjoy the rest of your weekend. 103.90 then is a short. Your short there, your short stop is, and if you can manage it, I mean ideally that the 104.39. This is going to be your short stop, and it's going to be your long stop if you haven't worked that out already. You know, if we can use a significant point, you know, for the stops, then we should. Our bias is to the downside, really. Certainly this Aussie dollar, if the S&P rallies, it's not likely to go down. If the S&P continues to decline back through the lows, this will decline. So you don't want to look at this in complete isolation. You want to be aware of what's going on in the broader indices as well. So short 103.90, short stop 104.39, the long 104.80, long stop 104.39. Now the long point, I've taken this long point here because it's above the 104.39, but the 105.23, which is our structural long, is not far above the price action, not far above this long point. So if you want to be a bit more prudent, a bit safer, then you take the 105.23 long. This is a beautiful setup. It's I'm sure it will do. This market's volatile at the moment. This is gonna you can get to these levels very quickly indeed. Okay, so there's your Aussie dollar. It's the confidence pair. So as I say, further declines in the broader indices, you're looking on the short side of this. It's back to the 101.82.